All right, guys, I know this gets tossed around on YouTube virtually every week with every other YouTuber, and myself included, I'm sure I've said it too, basically saying this week is critical to the stock market, but this week, it probably is actually true. I mean, the Fed is in the first spot since they started these rate hikes where they actually broke something with all the bank failures there. So this next meeting coming up in regards to rate hikes is not easy at all. The answer is not easy, what they should do is not easy, and the consequences for each action are not easy as well. With so many options on the table, what will the Fed do and what will the consequences of those actions actually take hold of the market and what happens with the market? And what should you do as an investor? So let's talk about all that today, guys. Let's talk about what's going to happen, what the consequences are, and what I'm going to do about it. I'm just asking in exchange for you guys to gently tap that like button and consider subscribing too. It's super easy to do if you like the truth without the hype. And if you want to see all my buys in real time on all these stocks, all 15 of the stocks on my watch list, complete with price targets, learn how to do evaluation, and everything else in between, make sure you join the Market Insiders private group with a March Madness sale. It's just running mad right now in the group. And that's exactly where we have 5 courses for you to learn how to do everything from planning to evaluation to even buying real estate and how to make it all work together. And again, you get all my buy and sells in real time. You get my watch list with price targets. We have hundreds of tutorials and videos covering everything across the spectrum. And you get access to the best 6- and 7-figure Discord out there. And there is a secret project coming to the group, but I will not be able to keep the price this low when it goes live. So make sure you lock in your price today where you get that price as long as you stay a member before that price actually goes up forever. So make sure you check out the pinned comment and lock in your price for life, as I can't keep the prices this low once this super secret project comes through. Now let's talk about a little bit of a subject matter that, obviously, gets people really upset and really riled up. And it's something that had a lot of steam before all the bank failures kind of basically took all the attention over there with the bank failures. But that is unemployment needing to go up and the Fed actively trying to raise unemployment and what's going to happen with all that. So I kind of feel like we need to address that first to just kind of make sure we kind of understand where the Fed is thinking and what the expectations are, and more importantly, what the possible consequences could be. Now, I'm not trying to be insensitive with my comments here or anything else like that. Please don't take it that way. However, the Fed needs to get unemployment moving up. I mean, being at 3.5, 3.4 is not healthy over the long term. And unfortunately, we've been at those, almost too low levels for a couple years now, and it's just not sustainable and it's not healthy. Now, I agree we don't want unemployment through the roof or anything else crazy like that. I agree completely. But the healthy rate of unemployment is kind of in that 4 range, 4 to 4.5 or so. And we need to get unemployment up there. And honestly, the Fed chair has said in the past, hey, he's willing to actually have it go up higher, basically depending upon how you want to interpret it, up into the, upper 5, 6, maybe even 7% before they really get concerned that they're really breaking the employment market. So that kind of tells you how far we have to go in order to get there. Now, I'll start getting concerned if we get up into the upper 5s, kind of that 6 range there, and I'll kind of start really getting concerned with unemployment there. But I'm not interested at all in it raising up to 4, 4.1, 4.5, whatever the case is. And the media and the YouTube will freak out and everybody else will freak out. And it's like, guys, we're just back to the starting point, right where we should be in the first place. And honestly, I hope he can keep it at the 4, 4.5 range, somewhere right there in the 4s, while still continuing to see inflation come down. That would actually be the best case scenario, but having it in the 3s is going to create problems long-term in the labor market there. It's just kind of like, being unhealthy or doing something unhealthy or too much of a good thing is not actually good for you, right? I think, before we've talked about this, I've used the pizza analogy. You just can't continue to eat pizza every day. It may taste great, but, by the time you're on your 10th slice of pizza, it's not nearly as good as the first slice. And more importantly, if you're doing that every day, it's probably not going to go well for your waistline either. It's just not healthy, regardless of how good it is. So this is kind of that same sort of thing there. They need to actively get that up into that 4, 4.5% range in order for us to have a healthy labor market. So we have inflation dropping and we have that unemployment still sitting down near record lows. So, okay, hey, great. We're getting inflation moving in the right direction. That's awesome. And oh, by the way, we got some real easy comps coming up. So that's going to make that number even lower and going to kind of accelerate the pace of that number going lower. Now we kind of need to get that labor market to creep up just a touch, not too much, don't overdo it, but that's kind of the context and why I gave you that context with that unemployment number, is so that way you can kind of see what's going on in the background. And more importantly, we all know rate hikes are going to affect that, right? If they continue to hike up rates and they overhike, it's going to create more unemployment than what we want it to get to. That 4 to 4.5, if I could talk. Anyways, 4.5% range that we need to get to. If they, over tighten, it's going to cause us to jump up and over that. And then it's going to be a struggle because now, hey, you may have inflation going down, But then now you got a labor problem that you now got to fix as well. And hey, we didn't have a labor problem prior to this. Well, we had a labor problem, but the problem was the unemployment was too good. And now you kind of flip-flop the whole narrative and such. So we don't want that either. So I think the Fed is actively trying to figure out how they're going to do that, what they're going to do that. And of course, interest rates is how they're going to play that game. So the least likely thing I think the Fed is going to do is a 0.5% raise. I know in the last time he talked, he said, hey, it was on the table. I honestly thought that was more of a, not necessarily a threat, but more of a just, hey, market, don't get too excited here. However, if CPI comes in hot again, that was after the last reading that was, basically the CPI was almost the same, didn't go anywhere. Hey, if the next one comes in hot again, we may have to do more. I think that was more of that preemptive messaging that he's been doing this whole time to kind of give us the heads up that, hey, if this happens, 0.5 is on the table. I think with the reading being low and the banking chaos going on as well, that is completely off the table here. However, I shouldn't say completely off the table. We'll call it a very, very small. The least likely of the group to happen is that one. So if they did actually do it, you can expect just chaos. The Wall Street's going to sell off really, really hard. I don't know if we'll hit new lows or not, but I know it's going to sell off really, really hard because everybody at that stage, you're kind of thinking the Fed doesn't get it. They're missing some things. Inflation's going down. We're having other issues. You're exacerbating problems with the banking sector, a lot of other things out there and such to where it would feel unnecessary for them to have to take this step. And if they did it, I really think a lot of folks that, the confidence in the Fed's kind of, iffy anyways, it definitely would not help with that at all. So I think there would be mass chaos, mass sell-off, which of course to me as a long-term buy and hold investor just screams opportunity. I would be scooping up the deals like crazy. I'd be patient at first because I think the sell-off would last more than a day, guys. I think if we see a multi-week sell-off there, especially bouncing so hard off of those, end-of-year lows that we had last year, I definitely think we would see a big move down. So I'd be patient, waiting, and I'd be scooping up all the deals. Again, this is the least likely, and of course, in some ways, it's kind of the one that I hope the most because that way I can buy a lot more of the deals because I haven't been able to buy a lot of stocks this year like I was last year. But nonetheless, that is exactly what I will do if that happens. Now, to me, the next most likely, not the most likely, but the second to most likely, I'm not real sure how to say that. Anyways, basically, the one we just talked about was the least likely. This one's kind of in the middle. And then the last one down there is the most likely. But to me, this one right here in the middle is that they do absolutely nothing and they basically pause the rate hikes. I'm sorry, I know a lot of folks out there are calling for it, and a lot of folks have been calling for them to stop, actually since last summer, if you want me to be honest here and such. But with all the banks collapsing and it definitely being partially due to the rise in the interest rates being so sharp so fast and SVB's management being dumb and some of the other banks being dumb and such, nonetheless, I definitely think there is reason to not go crazy with the 0.5. However, you could still do the 0.25. It gives you room to pause after that, or you make one more quarter point raise. Nothing's going to break because they make another quarter point raise. It's just not. That's just a fear narrative that's out there trying to get everybody to rally behind, trying to put pressure on the Fed to not raise again. Now, if we do get zero, the market is going to rocket up, guys. That's basically going to be the green light for big money to start piling into this stock and for Wall Street to start piling in. And at that stage, the run is going to be pretty big. Now, of course, there's always something else that could derail that run. But unless he is just ultra hawkish in his comments afterwards, I see no reason for the stock market to run up like that. And in that case, I'm not going to FOMO in. I'm not going to make any other decisions like that or try to catch this or catch that or trade this or trade that or whatever the case is. Not every stock is going to run, which means I'm going to be able to pick up some stocks on a discount there. And hopefully it's some of those old man stocks where I've been trying to build out that part of my portfolio. And it's some of our growth stocks that have been disproportionately beaten down forever. But of course, we've been buying it during that whole time. We'll actually make that kind of skyrocket up there and make us very, very happy investors. So I'll still be looking to buy. However, the pool of stocks I'm going to be able to buy from if they do they basically don't do a raise at all, it's going to be a lot smaller than it would have been if they would have done something else. As we start seeing these month-to-month comps get easier and easier and easier, and that inflation number probably, not guaranteed, but probably falling harder and harder and faster, that's going to put even more pressure on the Fed. Like, what the heck are you doing? Why would you pause then and then start raising again a month or two later? It wouldn't make a lot of sense. And to me, it puts them in a very difficult spot to, if there is something broken or if they just really want to get to that terminal rate, because that's where the math is telling them that's where they need to get to make sure the thing stays out long term, then you kind of are, limiting your options or making it seem like you're reversing your position later on by not going on ahead, following through with that quarter point raise right now and just getting it out of the way so that way you kind of have a clean slate to kind of see what's going to happen from there. So sorry, I don't think we're going to see zero at all. I think they're going to go with the most likely scenario, and that is that we get the 0.25 that they basically said we were going to get all along. Now, sure, Wall Street expectations are all over the place. First, despite the Fed saying that it's going to be 0.25 next time too, probably. Then it was Wall Street thinking it's going to be 0.5, even though, Jerome didn't say that was going to happen. He just said it was on the table if this continues to not go the way it needs to. Then it was 0.25. Now it's, closer to zero. I'm sure it'll move again before it actually happens. Who freaking knows at this stage? I don't listen to Wall Street and where they think it's going to go and everything else. There was people saying it was going to go to zero, and Wall Street expectation was zero over the summertime last year. It was absolutely ridiculous given the fact the Fed said nothing. That's why we got the Jackson Hole speech. That's why some of those other things happened, because Wall Street was just out of control with their narratives. There was no truth to any of it. So I tend to just ignore all that sort of chatter and such. Right now, 0.25 to me seems the most likely. And in that case right there, I think we'll get some selling. I don't think it's going to be heavy or anything else. So I'll just continue to execute my plan. There's going to be a deal. There's going to be a discount somewhere. And I'm going to continue to buy those stocks that are on discount. And if you want to see those buys in real time, take 5 courses for free, jump in on the live Q&As with me, have access to me 24/7, join our Discord group, and take on all the other things, including that secret project that I can't talk about yet, guys, but it's coming, I promise. Make sure you sign up for the Market Insiders private group where we're running the March Madness sale right now. And when that expires, guys, whenever that new item comes on board that I can't talk about yet, that secret project, I'm not going to be able to keep that price that low during that time. So make sure you're locking your price right now because you get to keep it for life. And click this video here if you want to see 3 other stocks that I'm buying right now. And click here if you want to see exactly my plan for the market right now. So thanks for watching, and we'll see you in the next one.